guys, welcome back to the Attachment Point News Roundtable. Got Broker Brett here again with Patrick Klas of MGV. Thanks for taking time, Patrick. How are you?
Of course. You need to start having more guests with only 4 letters as their last name. Not Kasuji, like that's just not fair. I've got 4 letters I'm using.
I did promise that I won't mess up his last name anymore, so I'm not even going to say it right now just because I still need another week or two of practice before I butcher
Yeah.
Kyle's last name. He's a great dude, though. It was fun having him
Yeah.
on. It's awesome seeing what they're up to.
I agree.
Yeah.
I agree.
So Patrick and I were lucky to catch each other in person, outdoors during the time of COVID. You came down here and slimmed it with us in LA, checked out Greater LA, and
Yep.
you can
Loved
see why
it.
everyone's running away from us right now. But yeah, Patrick, thanks for being so approachable. And small plug just for InsurTech Twitter. I think that's how we got into conversation, just really bantering around the industry. Yeah, it was pretty fun.
Yeah, brokers and agents still represent a huge amount of distribution, and pretty much every startup I talk to has broker, not pretty much, but a lot of them have brokers as part of the roadmap, whether it's a tool. And so I have been talking to a lot more brokers that I find that mainly on Twitter that are excited about the InsurTech space and are running towards it. And so there are a select few of you being one of those that have kind of really embraced InsurTech. And I think brokers like you are going to have a huge, impact on the future of valuations.
I was bummed when I started seeing other brokers at InsurTech LA. I felt like it was like my hack for like a year or two. Yeah. I was like the only one around. I was like, no, it's fine. I'll just hang with these startup guys. You guys go to know your books of business. Yeah, the thing that drove me to is just back to best technology to win the war, and also, companies like Fineo. I think we bring kind of where the rubber meets the road. You can have all these ideas, you can have the paperwork, you can have the tech, but you need somebody who can kind of take the tech and the philosophy out to people, I feel bad though for rambling. You're the guest today. We haven't actually ever had a VC on before, so we got to pick your brain a little and, maybe see what you wish, startups knew about VC or vice versa,
Yeah. So that's the question. What startups wish they knew about VC?
Or what you kind of wish when people are coming to meet with you, what you wish they kind of had in mind ahead of time, or if you can give any coaching to somebody who's trying to build a startup right now, whether it's, bootstrapped or maybe had a little bit of angel investment, like what do you see as kind of a way to pre-game plan to engage with MGV, or maybe just build a good company? Maybe it's a little bit more straightforward.
Yeah. So, I interact with you on my Clubhouse that I do every Wednesday at 4:30. And one of the questions I've almost stopped asking is I've done like 20 of these at this point. And like the first 18 I asked, did having the term InsurTech on your deck make it easier or harder to raise capital? And 100% of them said way easier. The excitement, the buzz, it was real, and people are excited about this concept. So I think the stigma of like InsurTech being a niche thing, there are 50 CDCs in insurance, there are specialized funds. There's a lot of capital that is excited about this space, and investors are getting smarter and smarter about this space. And then the thing I wish people knew about InsurTech is, yes, it's exciting, what's not fair is all 18 or 20 of these guests that I asked this question who had successfully raised a round. So of course they're going to say, hey, this is easier. But there's this hard thing about pitching a VC in InsurTech, where almost always you're going to land on two sides of the coin. One is this VC knows InsurTech very, very well, to the point where they might have biases that counteract your decision. Not your decision, your startup, your idea. Or they're not going to know enough. And I truly believe that, in myself included, I'm going to always fall on one of those edges. I'm never going to be centered. Rarely will I be right down the middle. Like, I know your concept, I know the process, I'm really excited about this. And there are a couple spaces that I think still out there that someone can come to me with the idea that I've been thinking about, and I would run with it. But in both situations, you have to step back and kind of be first principle and educate someone. And you need to figure out whether you're educating someone that knows the space, and you need to stop and say, do you agree or disagree with me? Right? Or you have this amazing opportunity to educate an investor on the space. So start with your thesis, right? We're going after brokers. Why are we going after brokers? Well, the broker market is large if we don't do this and we do this, right? And you can educate essentially in a couple minutes, write their memo for them. I think it's almost a little bit harder if they're really deep in InsurTech and they have biases, but you're going to always be there. So figure out which one you're in and then pitch that way appropriately.
And I think to go to the basics, because insurance nerds predominantly, I'll say insurance industry with some brokers, and probably largely on the P&C side, majority, the deal memo. So you're not just selling a VC, typically you're selling somebody at a fund. So they have to go back, and usually it's one page for their partner meeting, usually on like Mondays, I want to say. But you're not just selling them, you have to sell their team, right? You don't get to just go, I'm Patrick, here's a check, here's a check. More often than not, you're part of a group and you have to get everybody's buy-in. So
the most important thing is going to be sell that one person, right? I like to think that like if I'm the lead investor of the check, you get me and MGV, right? You get all the services we provide. We provide sales consulting. We have a full-time sales consultant on staff that works with our portfolio.
Cool.
You get a lot of things, right? That might be deck review when you want to go raise your next fund. Like the whole fund is going to come together, but essentially that one person is going to advocate for you. So it's first most important to win that one person, and then that one person's job is to win the rest of the team, in my opinion. Now they're going to usually do that by saying, "Hey, I think this entrepreneur is great. Here's why. Listen to them pitch. This idea is great." And so they're going to pass that burden back on to the entrepreneur. But it's not going to be the first time. They're not, that investor is going to go back and handle the two sides of the coin. Like, hey, this team either knows a ton about insurance, and this is actually counterintuitive to what we've thought about in the past, or hey, I need to bring you up to speed on why fraud and disability is $1 billion market, right? I don't even know if that's
flood
true.
Insurance is like an underappreciated asset that you strategically could do X. No, that makes a ton of sense to me. Just from a philosophical standpoint, like we connected first on Twitter, had back and forth there. How important is it, or would you recommend people engage with you before trying to raise money? Are you open to just kind of, I'll say, open networking on the fly? Or do you think it's better for startups to sort of have their ducks in a row before starting, potentially VC conversation?
So for me specifically, I want to talk to someone before they've quit their previous job. Because I'm an early stage investor, right? I'll write pre-seed, seed. I want to write someone like, so my last check that I can say, like people hadn't quit their jobs when I started talking. And, like there's nothing better to me than that, right? Because sometimes an investor, it kind of sucks to be like, hey, I wouldn't quit your job over this idea, right? Like, and then you might offend that person and you put fire under their butt that they're going to go quit their job and prove you wrong. And like, that might be better, but it's how you deliver that message is pretty important.
Totally.
But honestly, right, I think the most capital is in the Series B world, right? We're raising $40 million. Second most capital is in the Series A world, in my opinion. And like, there's, I think, a really fun niche, which is like, there's a couple, there's not, you can name most of them on two hands. Like, people writing seed and pre-seed checks in the insurance space that have been for the last couple of years. And I trust you, all of us want to speak to, Rick Zulo over at Equal Ventures, David Mort over at Propel, right? Even my old fund, American Family, like Drew Aldrich in New York, like is going to want to talk to you pre-seed because he's going to want to give his opinion and that will help him write the check in for a year or the seed check in a year. So it depends, right? If you set the context of, hey, I don't have my ducks in a row, this isn't a formal pitch, I want you to get your thesis, and you set the context that way, the conversation is going to go well. If you come in and say, hey, this is a pitch, I'm raising this much money, and you're not ready, it's not going to go well.
And I think the other part is on the entrepreneur side, you can get lost in your own details. You can get lost in what we're working on. You can get lost in the trees, in the forest. I'm messing up an analogy there. But be open, right? Like be open. So you might have something and you might have the talent, you might have the expertise, but if you're talking to a VC or an investor, like they may like just pivot your chair this way to kind of have a little bit of a new view. Do you ever kind of help people sort of tweak or dial in, what they're working on? Or, maybe they're looking at it as X. You're like, well, I see the bones of X, but have you thought about Y market? Let me know if you find anything interesting over there,
I would say where I do that the most is like, I don't want to take credit. Like these entrepreneurs spend way more time on their idea and are way more like, I would say where I have a little bit more experience is on business model development of an insurance company.
Yep.
As you interact, right? There are 1,171 carrier groups in the United States that sell P&C, right? If you want to interact with those carrier groups, how does that work? There are 38,000 agencies, independent agencies in the US. What is the segmentation of those agents, and how does it diversify across, captive, independent regional, independent national, and D2C, right? By line. Like, let's have that conversation. Where is the future of this going? I think cool. a lot of it is like, hey, if you build this, you are a SaaS play and an infrastructure play for this. And let's talk about the margins that I think you can extract from this. Because I just see a lot of, so I think there's, now that doesn't mean I can go execute and sell that, right? Like, but I think walking into the InsurTech space, you think, oh, wow, it's $700 billion, the P&C space of premium a year. No matter what I do, the market's going to be large enough. And that's just not true, unfortunately. Of that $700 billion market, like the combined ratio is what, 99.3%. So for every dollar people take in, they're taking in 0.7 cents of true profit before investing the capital. So the market's pretty tight, right?
That's interesting. I never thought about like that. I always think of the grand number, and like you said, you kind of broad brush. You don't think to kind of distribute down to your network or your segment, what you're working into. That's cool.
Yeah. And so when you say, hey, this industry for some lines has worse profit margins than grocery stores, you go, oh,
yeah.
I say, yeah. So often the startup that say, I want to go talk to this claims department about a $20 million contract, I'm saying, that contract actually might be bigger than the division's entire contract, because this is a very low margin business. So building a business model that injects into the value chain of insurance is incredibly important, right? And so I think a lot of it is how you tell that story of building, because you're not going to do that in the first round of financing. The sales cycle for these carriers can be 36, 60 months. And so it's a lot of storytelling and vision and market sizing and understanding the dynamics of this market. And it's not a winner take all market, but the top 25 do pretty darn well, right? Yeah. But 26 through 100 also do pretty darn well too in our massive companies. So that's where I like to spend a lot of time with entrepreneurs.
Yeah, I like the kind of blue ocean mindset, and the fact that there's even like different regions within our country, different winners. Like, I think there's just tremendous opportunity to network. I always joke that like I'm not necessarily worried about my peers and the people next to me. I joke that it's like us little guys versus Aon, or it's us little guys versus RJ Gallagher, and they're not worried about us, from startup land. So we got to kind of band together, help each other out with ideas. Hopefully have a little bit of a network effect in what we're working on. And anybody who's raising seed money, like, you can have a couple different winners. By all means, I know you kind of have to pick your horses in a vertical, but I love the openness, the positivity, kind of the group think a little bit, in a good way, of InsurTech. It's pretty interesting.
Yeah, I don't know if you want me to share this idea, so you might have to edit this out if you don't, but like you and I talked about how I think you have a more significant title than you call yourself broker Brett, right? But what I think you could be is actually a broker in resident, right? Like working with VC funds to explore business models and like efficiency gains, and when do you use wholesalers, when do you not, right? Like honestly, as you look at brokers, there is no better reading material, in my opinion, than the Goosehead quarterly reports. They talk about how the average independent agent spends 28.3% of their gross commission time, not just time, but the gross commission time, doing non-sales activity. And theirs do something. These numbers are I think are right within like 0.5% of like 7.8% gross commission time doing non-sales activity. There's a lot of money to be made in there, right? Like, and sorry, I'm rambling.
No, I think you're right. Like the whole broker in residence, kind of being an agent who helps startups, helps companies. It's funny, I have my horses right now, and like Fineo's like midstream hitting a stride, so I feel like I got to deliver on that. But I hear you. Like, it is so important to have us out there. I always think of myself as kind of like a knife fighter. It's kind of a ridiculous analogy, but I'm fighting one by one. I'm in a trench. I'm going to get a deal here. I'm going there. Like, literally touching the paper every day. And then luckily I get to talk to, people like yourself who get to see the whole market, so if you can kind of combine those two visions where you have the creator in the middle, it's kind of perfect. Talk to the guys who are dealing with paperwork, know how hard it is, know how slow it is, know what it's like to get a check from somebody, know what it's like to see a commission check hit, a bank account. And then on the flip side, talk to somebody like yourself who actually understands distribution patterns, market size, different verticals. Tony Canas will give Abel Travis credit for it, but the whole insurance and tech, how you need both. You need somebody who can really talk to the game on the tech side, and you need people who really understand what it's actually like to transact insurance. Because I've seen both sides of it come up short. I've seen insurance people trying to do tech, and I've seen tech people trying to do solves for insurance that don't really know insurance at all, and they're kind of lost in the weeds as well. When you're looking at founders, do you like backing kind of co-founded teams, or do you mind if it's an individual founder, if you think they have the chops? Is it kind of case by case, market, what they're going after? Kind of how do you measure the founder or the founding teams when they're coming to you?
It's been interesting. I've been thinking a little bit about this. I don't care if it's a single founder or co-founder. I do care about how the team knows each other, right? And where they're going for the long term. I've seen less technical founders over the last 3 years than I thought I would have. I am seeing two things. I'm seeing really good entrepreneurs saying, hey, that InsurTech space looks pretty great. And I think I can get up to speed pretty fast if I give my whole energy to it, right? And I'm going to spend a month locked in a room reading reinsurance books and pricing books, and I'm going to learn this space, right? And I'm going to find an opportunity there, right? And that excites me. And I'm also seeing a lot of people saying, I was at ClearCover, I was at Root, I was at Lemonade, I was at Hippo, I was at, pick your poison, any of the amazing InsurTechs that have done really well. And I want to go do something that's not in that space, something else that I saw. And that excites me even more, right? Because we are seeing a resurgence in InsurTech of second-time founders who didn't found their company, but were at, and say, hey, I want, and that excites me.
Yeah.
And recently I've invested into more technical founders, and that's fun too, but they spend a lot more of their time working on the insurance than they thought they would initially.
That's funny. That's interesting. I don't know if we give enough credit to like the milieu that is insurance. It's like this funny little slow involved like ball that like the more you know, the less you know. It's a very fun thing to work on. I'm excited for, like you said, the spinoffs, and not to name names, but we know a few people I think in common that were at other places that started other things. I'm looking forward to some of that exit money cycling back in the system too. I think it's going to get really interesting. Yeah, I know somebody who sold to somebody who's working on something stealth. I got brought into a conversation, maybe offline, I'm checking on that. It's really fun, and I almost feel like they're like picking off little inefficiencies. They're finding these like unsexy little corners of our industry and just trying to digitize it. But the one thing I would recommend too is be cognizant of the pain that you're trying to sell into, because sometimes I see people trying to solve problems that just aren't that bad, or that we're so used to working around that I think can kind of go forward, that aren't so archaic. It's not like they're doing carbon triplicate, there's inefficiencies, but they're fine. So you want to make sure it's like a real problem, it's a real pain point. Yeah,
absolutely.
Yeah, absolutely. But yeah, that broker driven distribution, I appreciate you kind of being on that horse early. It's hard. People don't want to work on insurance. You kind of have to drag them through it a little bit. You kind of have to translate, life to insurance and insurance to life, I always say. Yeah, so I don't think we're going anywhere as middlemen,
Yeah, there's one topic I don't think that's talked about enough in the insurance and InsurTech space, which when you talk about SaaS, right? The first SaaS license you buy of Guidewire, Salesforce, Airtable is going to be more expensive than the second, right? And when you look at your 10,000th software seat license that you purchase, it's going to be 10 cents opposed to $10,000, right? And they're going to marginalize out. There's diminishing marginal return. For the most part in insurance, it's the opposite.
Oh, wow. Yep.
Think about it, Brent. As you distribute more premium to a single carrier, your commissions typically don't decrease. They increase. because A, that carrier wants you to incentivize, keep writing under our paper, and B, the more systemized it is and streamlined, the more efficient it is for the carrier. So it's an incredibly exciting space. And because I can't think of many spaces where you don't have diminishing, but you have expanding marginal returns,
That's
increasing marginal returns.
Yeah.
But and so brokers, I think when you think about that, when you say, okay, there's 28.3% of our time is doing non-sales activity, and we know in other agencies they can get it down to under 10. Well, that gap, I'm not going to lose all of it. If I'm able to do more, my margins as a broker will only increase. I'm not going to just get eaten away by software. In fact, this is an opportunity for the entire industry to leverage more and get more. And that, I think, is one of the most exciting things that people don't talk enough about insurance and InsurTech generally, about that opportunity.
No, you're exactly right. And I had never thought about that. I hadn't connected dots on it. So right now at our P&C brokerage, book is very small. So we get roughly 70, 80% commissions on what we write. We get over a certain hump, we'll get to 100%. We get up another one, we'll get to participate in override. And so I say 100%, it's really 12 to 15, maybe 10 to 15, depending on line of business. So you go up, so we're making more money. And intuitively, I think the software companies know that, because the big boys, be anywhere from $100 to $250 a month per seat. And you're right, as the systems get more complex, they charge you more, which is very interesting. And like you're saying, counterintuitive to most industries.
No, as the more seats you buy, the less expensive they are, because it's software.
It should go that way, but insurance is kind of interesting. The AMS system.
Insurance is the opposite. They pay you more, right? And I love startups always say, oh, I'll do this, but like, the more you interact with the carrier, the more you interact with brokers, the more you interact with that, you're driving efficiency to you and to the entire system. And building a business model that enables you to take an incremental value of that increasing marginal return is what makes this space so exciting.
That's cool. And the other thing, and you can get a little high-minded about it in the best way possible. The more you can automate, the more you can kind of create efficiencies, the less we're buried in paperwork and back office resources, the more we get to talk to people. You really learn what we're insuring, make sure we have the proper policies out there, really properly do a renewal, not just behind and shove paperwork at them at the last minute saying this is the best rate we're going to get. So I think, it's just a win all the way around. It's really cool.
Yeah.
So, the VC space, what recommendations would you have if somebody's trying to get into it too? It's not necessarily one, like I'm not getting like Indeed notifications, hey, apply here to this VC firm. If there's anybody kind of younger out there, maybe to start up or who finds it super fascinating, would you recommend, reaching out, reading, just start networking,
The advice I would give to someone is being a generalist in venture is pretty difficult. Right. I think only the top tier ventures, venture capitalists get to be generalists, right? They can write something in insurance one week, a huge check, and then something in consumer, and then something in health. Like they can do everything well because their deal flow is so great and their access is so great. So my first recommendation, and this might sound like super like millennial and like cheesy, but like specialize in something that excites you.
Cool. Yeah.
And for most of the people, I don't think that's going to be insurance. I can make a case of why, but maybe it's consumer, maybe it's consumer packaged goods, maybe it's climate, maybe it's fintech, maybe it's serving the underserved, maybe it's impact, but go in and specialize on that and read and know the market. Who are the venture capitalists that folk in that space? What are the startups raising that space? And then with intentionality, reach out to the people that you want to reach out to and say, hey, I'm really passionate about this space. And I want to ask you a few questions, and then go in and then tailor your questions to that fund's recent activity. Hey, I just saw you wrote this check to Fineo, right? Yeah. You must be super excited about the life structure play, right? What do you view as their business models? I'm super curious how you look at, right? You are demonstrating that you thought, the space and what that fund has done very specifically. And that will get you a long way, in my opinion. That will get you 85% of the way there, but it'll take time, but it'll take a lot less time if it's something that excites you.
It was interesting. I got to represent Fineo at an investor barbecue up in Palo Alto. I don't know if I told you the story before. Kind of intimidating as an outsider, somebody who's just done door-to-door sales, copiers, office moves, personal lines insurance. And, the joke was I brought a 6-pack of beer because I was afraid to show up without anything. And they thought it was hilarious. I ended up cracking a beer with the founder's son. Um, but it's just people like anything else, like contribute, add value, be outgoing, know what you're talking about. And what I find really interesting when I'm around, investor folks is I find them kind of like an interesting combination of like dreamers and people who pay attention to the numbers. It's like a really cool dichotomy of like trying to read the future, but also like knowing things have to pencil out on a spreadsheet. Yeah.
Yeah, I mean, I have done something recently new, which is it feels silly to not be participating in the public market side of the InsurTech space.
Okay.
So I've been buying tiny amounts of every InsurTech that I want to try.
I like it. Yeah.
So think Goosehead,
Yeah.
Duck Creek, Guidewire, Lemonade, Root, Max. Like I found an incredible InsurTech called Max. Like,
Cool.
and it's I am a terrible public equities investor. Like no one should ever take my advice. No one ever will. I'm
trying to build my own stuff. Yeah.
Yeah, but I'll tell you what, it is so fun because I'm spending 99% of my time talking to entrepreneurs, early stage, and to own a small part enough where I'm tracking the public markets of how the world has these multiples for Lemonade, Root, all of the above. It is so much fun to see the two ends, right? And like, since doing that, it's given me a crazy passion. It's like, I'm talking to this entrepreneur and I hope to one day own part of their, publicly traded stock. And it's been a connection that I never really had before because I didn't have that option. I could have always bought Guidewire and Duck Creek, things like that. But now it's like a whole new world. And it's been actually really fun.
That's a really cool hack. I bought some crypto just because I was like, I know blockchain, I understand how the tech works. I need to actually just buy some just to like participate.
You're alone in that. I don't. I don't. You're the only person on this call that understands how the tech works.
I'll say enough, So I was like, all right, I should buy some of those just because I've jibber jabbered about it long enough. I do have some ideas. But I really like the idea. I do have a ticker kind of going of the InsurTech stocks just from my own kind of perspective and to watch. But that's really cool to think about our starting gate versus the public reaction and to try to think through like a whole through line of the narrative of the things we hope to, participate in and help grow and help win. It's really cool.
Yeah, it's like every day I'm looking at it, and like it's so nice being in California and waking up at 9 and the market's already been doing its thing for a while. Then it closes at 1:30, whenever it does. You're like halfway through the day, you're like, how did the public markets treat insurance today? and it's been fun, and it's something I didn't anticipate doing, but I've really enjoyed.
Yeah, no, I love it, man. I'll buy a couple shares after we get off this today for sure. Just keep track of our companies. Yeah, for me, the thing that drew me to insurance is you can get in the game with a laptop and some contracts and a license. You don't need a CNC machine. So it's so open to entry. But with that, it's so challenging. There's so many of us out there trying to build businesses, win business, hold business. The older dogs, and I don't anything negative, aren't trying to tell us the keys to the kingdom. They're not trying to hand over their books to us and go, hey, here's how you make it.
They'll sell them to you.
Yeah, potentially. A lot of them are winding down. It's actually harder to get them to exit than you'd think. I can see the guys with the bigger offices want to exit. They can write a check. They don't want to ride this thing down with 10 employees, but the 1, 2, 4, 5-man shops, they'd rather just like let the thing melt down than get out of it for 2.5 years worth of, gross revenue or whatever. So it's really interesting to be around small market stuff right now, trying to scoop that off. Yeah, no, definitely. But it's a great business. I love it. I always say there's very few businesses where you can do very well financially, but you can also do a genuine good if you're doing it right, because if you're getting good product out there, companies are taking families are taking.
You're helping someone. Yeah.
The wheels keep turning, and I think that's what it all comes back to. But yeah, man, no, thanks for being open. As a street level guy, it's cool making friends in the VC space. I can say you're one of my first genuine like straight line connections. I've been introduced to other people and it's been nice, but thanks for being the first dude to kind of answer calls and hang out
Of
at your
course,
level. Yeah.
now I bug you more about tech than I'm seeing than you bug me. So
Yeah, I know.
I think you've lost in this, Brett.
No, it's fun, man. I enjoy it. I enjoy being the InsurTech guinea pig, and I'll work on my brokered residence. I'll help deliver my Fineo guys. We got a little more work to do right now, but I'll definitely look forward to future roles like that, you know. And
You gotta make it to ITC.
yeah, no, definitely, dude. No, we got to be. Yeah, it's awesome that we already got to meet in person. I love that. You know, it's so fun. When you can, and this is just anecdotal, but I swear, like an hour in person, you can make a relationship that takes a year over Zoom, over phone, whatever else. You know, it's just so good to be around people. But yeah, dude, I will at least get out for a certain point during ITC. I'll chase you down. It's a 4-hour drive, worst case scenario, from Southern California, so I got no
There you go.
excuse. Yeah.
Yeah, awesome. Thanks so much, Brett, for having me. It means a
Yeah,
lot.
absolutely, Patrick. We'll talk soon. Thanks, guys, for watching.